Today I'm going to feature Danielle DiMartino Booth, Jim Rogers, the famous Jim Rogers, and James Conner. Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is October 15th, 2024. David Lynn interviews Danielle DiMartino Booth, and he plays a clip for her from Jamie Dimon, CEO and chairman of JP Morgan. And you'll hear the clip, but Jamie Dimon talks about geopolitical risk. Now, we think in the U.S. of geopolitical risk as the current election, the presidential election. What he's talking about is more global. He's talking about Ukraine, Russia, China, and North Korea, and how those are linked, and that you've got children who have been sold or passed into from Ukraine into Russia, and then China controls Russia, and then they're allied with North Korea and so forth. Interesting perspective, but it's a geopolitical question, and so then following the clip, David Lynn says this. He says, the world is getting ugly. And that is a correct statement, I think. So, and then he engages with Danielle DiMartino Booth. She, of course, was on a member of the Dallas Fed, and has now written a book called Fed Up. She's smart, she's insightful, and she's definitely on social media quite a bit. Her comment was that when people talk about this, we think, okay, that's over there. That's removed from where I am today. And that people are getting numb to the fact of all of the atrocities and the violence and unrest throughout the world. And she says that people have this thought, her opinion, that they have this thought, I'll believe it when I see it. In other words, kind of out of sight, out of mind. In a way, I think she's right. But there is a lot of risk, a lot of geopolitical risk, and I don't know about in our country, but there's certainly some. But when you look at the rest of the world, some of it is much more exaggerated than what we are experiencing here. So anyway, I'll play this clip. I thought it was a good clip. It's a combination of Jamie Dimon and Danielle DiMartino Booth being interviewed by David Lynn. Take a listen.
Danielle DiMartino Booth returns to the show. She is the CEO of QI Research. We'll be going over her updated macro outlook. Welcome back, Danielle. Let me play for you this clip from Jamie Dimon, JP Morgan chief, and then let's just get your reaction, and then we'll start there. Take a listen.
And we have this war now, almost 1 million casualties in Ukraine. The Ukrainians say that 20,000 children have been kidnapped and sent to Russia. It's quite clear that Russia, Iran, and North Korea are acting in cahoots. That China isn't kind of part of that, but they're aiding and abetting Russia. China and Russia have spoken about dismantling the world order set up by America and the Allies after World War II, which have been quite successful in keeping peace. They want to do it differently, and that's their right. I don't think it's a good idea for the Western world. And this, and of course, the terrorist acts in Israel is being attacked, basically on 3 or 4 sides. This is tough stuff.
So the world is getting ugly. He listed a bunch of geopolitical problems. I'll let you respond to that. Are geopolitical problems, especially the ones he listed in particular, are they top of mind for investors right now?
I think it's curious that even though he describes a widening array of geopolitical tensions around the world, that investors, after many years of being numb to this kind of analysis, to these kinds of risks, remain kind of like, that's over there. It's not going to affect us. And that really has been what we've seen in a higher and higher concentration of U.S. market capitalization as a percentage of global stock market capitalization. I think American investors will only believe it when they see it. And that's kind of the attitude. And as far as they're concerned, oil prices seem to be pretty well contained where they are. and none of the disruption around the world has really affected the US stock market. So away we go.
For many years, I have followed and listened to videos and read books by Jim Rogers, a famous investor. Today, he is about 80 years old, lives in Singapore. I think about 11 years ago, he sold everything in the U.S., stocks, bonds, the dollar, etc., and moved to Singapore. And he invests internationally, sometimes in countries and in currencies or in assets that are kind of seem remote, but he studies that, and he's always looking for where is the bubble, where is something that's overvalued that is going to crash, and then he shorts it. That's been his whole life. Or where is something that is so undervalued that nobody has yet discovered it, and he buys it. So he's kind of a contrarian. The one word you'd use to describe him is contrarian, but he's entertaining. He's people like to listen to him, but because he's in Singapore and he's not seeking a lot of social media attention, you know, it is rare to see him on Bloomberg or CNBC. But anyway, Adam Taggart interviews him, and I thought it was a good interview. He says that all countries, and let's just say all developed countries, are overvalued. Their stocks are overvalued, including the U.S., but not just the U.S. Let's just say developed countries, because I don't know about the underdeveloped countries. And he says that, you know, it's kind of getting ready to cry when everybody is thinking it's going up, when the overvaluation is happening everywhere. He says that's the time to start getting worried. It reminded me of the Warren Buffett quote when he said, "Get greedy when others are fearful, and get fearful when others are greedy." And I think that would be a correct statement as a contrarian for Jim Rogers, a way of describing him. So anyway, listen to this. Adam Taggart is a good interviewer. His interview with Jim Rogers.
This week we're talking, Jim. The world has somewhat changed recently in the sense that the Federal Reserve has pivoted now, so it is now officially cutting interest rates. The ECB preceded the Fed, so the ECB has already been busy cutting rates, and then China just announced big monetary and fiscal stimulus. So we now have basically the world's biggest economies. They've returned to an easing cycle. Some people out there cheer that and say, "Hey, fantastic! Happy days are here again. This is going to be what it was like, you know, pre-COVID, between the recovery from the GFC to 2021, where we had all this tailwind at our back from the central banks." I don't detect a similar sanguine tone in your voice about this.
Well, maybe it's just because I've been around a long time, but I know that when everybody's happy, somebody should think about going home. Somebody should think about leaving the party. And as I look around the world, I mean, even the Chinese market now is booming. Everybody, Japan, the Japanese market was down for 35 years. You weren't even around when the Japanese market made its last low. So everybody is having a very, very good time now. As I said, even China was in the dumps for a long time, but now it's booming. So who's left? Who's left? I mean, I own Uzbekistan, but that's not enough to save the world. I assure you. I'm looking, but I don't see anybody who's going to save us.
Okay, well, Jim, you're out there in Asia, so one could say you've got sort of a front row seat to what's going on in China, and maybe a close seat as well to what's going on in Japan. Again, from the tone of your voice, it sounds like doesn't sound like you think that whatever life those markets are showing right now is going to continue for very long. Is that a true statement, or I don't want to mischaracterize?
Well, that's an accurate statement. I wish I'd said it myself. You're a smart guy.
No.
They don't need me.
Well, look,
Adam, just to repeat, I don't know any market in the world I'm sure there's somebody, but any market in the world is depressed, is down in the dumps. Everybody is either wildly happy or getting happy. And that has usually been a sign that start worrying. So I've started worrying.
So you've started worrying. Okay, so it sounds like you're not joining this party. If I heard you correctly, you've reduced your longs. You haven't gone short yet, but you've been cutting back on your long positions.
That's exactly correct. Yes.
Next, and finally, James Conner from Bloor Street Capital in Toronto interviews Chris Vermeulen, and I think he is also Canadian. I don't know if he's from Toronto or not, but he talks about the idea that where are we in the market? And you could say the economy, or you could say the stock market. I think he's mostly talking the stock market. And he says, and Vermeulen concludes that be short-term, he ends with this comment, be short-term bullish, but long-term there is significant risk. I wouldn't say bearish, but there is a point at which the market, it could be in Toronto, it could be in New York or the US, or it could be in Europe, the market is going to crash. We are on borrowed time. I don't want to be a naysayer, because I'm not a naysayer. I'm invested in the market right now. I think he's right. Short term, bullish. Stay invested. The market has been good for 15 or so years. But by the same token, if you take the view, say, of traditional financial advisors who say just stay invested no matter what, and when it goes down, it's going to come back up. You can do that if you want. I personally don't do that. When risk gets too much, I get out. And I think he's kind of saying the same thing. He says this: people are running out of money. Layoffs are increasing. So there is risk that is building underneath the surface, even though you see stocks going up, maybe particularly technology stocks or growth stocks are going up. But underneath the surface, there is risk that is building. And I'm just saying this because I'm just saying to you what, if you were doing the video, what I would want you to say to me, which is, be careful. Be prepared to employ your defensive strategy, whatever it is. You may want to go to bonds, you may want to go to gold, or you may want to go to cash or short the market or whatever you do. But at some point, you want to be prepared to employ a defensive strategy, a plan B. And I think that's what he's saying. So take a listen to this interview with James Conner and Chris Vermeulen.
Overall, like when I look at the big macro picture, kind of the overall view of what's going on, I believe we are getting closer and closer to a major market reset. But as you just stated, the market is still in a very strong uptrend. In fact, that August shakeout that you and I talked about and we're experiencing in our last talk, and the volatility that we've seen has really kind of cleansed the market. When the market has a sharp pullback and a pause, a couple month pause like we've just seen across the board, it re-energizes the market that could have another push higher. So I do think overall equities have another 3 to 8% upside on the SP 500 or the NASDAQ if this traction continues to follow suit. But in the big picture, I do feel like things are starting to slow. I think we're seeing, unemployment slowly creeping up, although it did dip a little bit last week. But we're seeing delinquencies on credit cards. Cards are maxed out and they're going delinquent. I think it's one of the largest times ever we've seen maxed out credit cards that are delinquent. A lot of people will just have small amounts of debt and just not want to pay it, but cards are maxed out. We've got residential, commercial real estate mortgages are starting to default and take off. We've got a lot of defaults starting to happen actually in the multifamily, which is like not a good sign at all because that's the most affordable to build, has the most potential. So there's a lot of stuff behind the scenes unfolding, telling us that, people are running out of money. People aren't finishing projects. Everything's costing more. And we're seeing like leisure and activities has we've seen some of the biggest cuts in that area. People just aren't spending the same amount of money as they used to. Travel, all kinds of discretionary products are coming to a grinding halt. And we've seen the biggest layoffs in that space. So when people start closing their wallets and tightening up, it's going to take a few months, a quarter or so, but it'll ripple through. And we're seeing, cut in manufacturing, which manufacturing is like 3 or 4 month lead time. They're not getting the orders from the stores, so they're laying off employees. So there's a lot of stuff coming down that by the end of this year, I think we could be like, getting very, very weak in terms of recession being a lot clearer down the road. So that'll tip the scales and make people even more nervous. And it's kind of a self-fulfilling prophecy. I think we'll see equities and things sell off and go from there. So I'm short-term bullish, but longer term, I see the music coming to an end.
Okay. Thanks for watching. If you have questions or comments, leave them in the comment section below.